How's it going, everybody? It's Stas here. So the markets had a great day today. The S&P went up 0.6%. The Dow went up almost 1%. The NASDAQ 100 went up 0.6%. And the Russell 2000 went up 1.3%. So today, we're going to break down the markets, some charts, my thoughts on everything going on, and a bunch of stocks I'm looking at right now. So sit back, relax, take a sip of your coffee, go down below, get your 2 stocks from Webull. All you have to do is use my link, deposit $100, and we both get 2 stocks valued up to $1,600. And feel free to also check out my Patreon if you guys want to keep up with all my real-time moves in the stock market. So with that being said, let's get right into the video. And as of now, it looks like we're a stone's throw away from all-time highs. Again, SPY ended up going up about 0.6%. We closed above $425, and the all-time high from a couple trading days ago was at $426.21. And it looks like the inverse head and shoulder that we called out recently ended up playing out. You guys can see the left shoulder right here, the head, and the right shoulder. And I was telling you guys the right shoulder would complete if we were to break 423, 424, which we ultimately did, and if we were to fill the gap up to that previous all-time high, which we also pretty much did today. And that is why the inverse head and shoulder ended up playing out. And now we're going to see the real test, guys, whether it's tomorrow, some point next week. I don't know exactly when this will happen or if it will even happen at all. But if we break out of 426.21, well, what's going to happen there, guys? We are going to hit a brand new all-time high. So overall, in the short term, I'm looking to see what SPY does between 426.20 as resistance and 423.50 as support. Maybe we bounce around here for the next couple of days, maybe just for tomorrow before we end up picking direction. But overall, we're very close to all-time highs. And QQQ, I believe, hit another all-time high today. Yup, it did, above $351 per share. And there's really not much to say on this other than the bulls are obviously in charge. They're gaining a lot of momentum. Volume today was higher than it was yesterday, probably why we ended up seeing that push to all-time highs. And we did see a bit of a pullback heading into the close. You guys can see here on the intraday chart, we hit 351.40 at about 12 p.m., so midday here on the East Coast, and then we pulled back for the rest of the day. But we did double bottom at about 349, which also held pre-market, and we rallied into the close, and after market hours we're up a little bit. So that's a good sign that QQQ, believe it or not, guys, wants to continue the uptrend and maybe push up even higher at some point tomorrow, maybe even next week. And I'm sticking to that as long as we hold above the 50 SMA here on the hourly chart, right? Which as of now we are holding. And again, if we do bounce off this point, which as of now after hours we're slowly doing, we're probably going to hit all-time highs again, whether it's tomorrow, some point next week, as long as the 50 SMA on the hourly chart here holds. And we saw the Russell crush it today. Small caps did very well, up 1.3%, like I said. And gold and silver, they went down a little bit. Gold down 0.1%, silver down 0.3%. The VIX also went down about 2%, so volatility died down a bit today. And we saw, obviously, fear, not much fear out there, although, you know, at this point, I feel like the markets are on a short fuse, if that makes any sense. You know, if we get any crazy information about, oh, the Fed's going to, cut rates or increase rates and, cut down on bond purchases sooner than expected, kind of like we saw last week with James Bullard. If we get anything like this, the markets could drop just like that, right? So as long as we don't get anything like that these next couple of trading days, I believe that this uptrend could continue. And at some point, it is going to pull back. I mean, come on, guys. It's not going to go all the way up to the moon with no pullbacks. So be mindful of that as well. But as of now, bulls are 100% in charge. So what do you guys think? Shoot me a comment down below. I'd love to know your opinion as always. And now let's talk about some stocks. We had a lot of companies report earnings today. Number one, we had FedEx, ticker symbol FDX. They ended up closing up 2%, but after hours is a completely different story. They gave back all of today's gain and some, and we're down about $13 after hours, guys. You can see here we're trading at about $2.90 when it comes to FedEx, and they reported earnings. EPS came in at $5.01 versus $4.99 estimated, so they beat EPS, and revenue came in at $22.6 billion versus $21.51 billion estimated, so they beat EPS, beat revenue, and the stock is down a good chunk. We're down about 4 to 5% after market hours right now, and I'm not exactly sure why. I'm not going to lie. And the truth is, there's not always an explanation to why a stock goes down. It's not always like, oh, it went down because of this. Oh, it went down because of that. The truth is, the markets, they do weird things sometimes. They go down when you would think, a stock should go up or a stock shouldn't move at all. And it's the opposite, right? Let's say we had bad earnings from FedEx and the stock went up. We've seen a lot of these different scenarios happen, and there's not always an explanation. So at this point, FedEx, I'm assuming they underwhelmed, or they came in a bit underwhelming when it comes to earnings, and that is why we're selling off. And now with the sell-off, we're trading under the 50 SMA, the 180 SMA. We're seeing a bit of a death cross here on the 4-hour chart. So in the short term, I would not necessarily rush into FedEx. In my opinion, I much rather see it retake 300 before considering an entry point. So I'm actually going to set an alert at about $300. Let me do that right now. And I'm actually noticing an inverse head and shoulder potentially in formation right here. We have the left shoulder. Let me show you this, guys. Left shoulder right here. We have the head right here. And then if this holds the neckline, which as of now it is at about 290, I feel like that could be the right shoulder forming as we're tanking right now pre-market. So let's say tomorrow, or after market, let's say tomorrow, some point next week, we end up consolidating at 290 and we slowly start climbing back up. That would be a very good sign that the inverse head and shoulder is panning out, and we might be able to get back over 300 at that point. And like I said, that is where I would consider playing ticker symbol FedEx. But until then, I'm not rushing it. There's no need to force anything here. And that's what I always say when it comes to the markets, guys. No need to force it unless you see an opportunity there. So we'll see what happens above 290 for FedEx tomorrow. And we also had CCL report, Carnival Cruise Line, and they lost $1.68 per share here in EPS, and they posted a $2 billion quarter loss. So they're still burning money like crazy, and it makes sense because not everybody's on a cruise right now, right? And we do have a lot of pent-up demand, as I've mentioned before when we talked about CCL, for 2022 and so forth. There's a lot of pent-up demand, and they ended off the quarter with $9.3 billion in cash and short-term investments, which, quite honestly, that should hold them over. That is not bad, considering they're losing about they lost $2 billion last quarter. So what is that? About $800 million a month or something. So they're losing hundreds of millions a month, but they have that backlog of cash, $9.3 billion in cash and short-term investments. And I believe as the pent-up demand here, people start going on cruises again, 2022 comes around, I believe this should slowly start getting better for Carnival Cruise Line, at least when it comes to the fundamentals, right? And at this point, they went down 2.5% today. The stock is currently off about 15% from their recent high. So I'm not here to tell you guys to buy anything. I'm not a financial advisor as always, but if I was looking at Carnival Cruise Line and I wanted to get in, I believe the opportunity is slowly opening, right? That window of opportunity is opening, especially if we start to get down to the mid 20s. Even in the low 20s, this would be a very interesting opportunity. But as of now, let's not get ahead of ourselves because we're not quite yet in the mid 20s, let alone the low 20s. In fact, we're holding the uptrend as of now. So I want to see if this holds and we bounce off, whether it's tomorrow, some point next week. That is what I'm keeping my eyes on right now when it comes to CCL. And Nike today, guys, holy crap, this stock is up. Wow, it's actually up even more from when I last looked at it. It was $140 when I was prepping this video after hours. Now it's at $150. So just like that, Nike broke out of the downwards channel. It's at an all-time high, $150.44. And wow, that's unbelievable. I'm assuming the conference calls right now, something like that. Okay, CFO says continue to see retail sales growth, consumer demand exceeding supply with inventory down double digits versus prior year. Says on China, business was impacted in April. Okay, but overall they did EPS of 93 cents versus 51 cents estimated. So they completely blew EPS out of the water, and revenue came in at $12.3 billion versus $11.01 billion estimated. So they crushed revenue as well, crushed EPS, and where I was really impressed was where I saw the North America sales growth. Nike saw 141% growth in North America, 107% growth in EMEA sales, and about 9% growth in China, which wasn't that great, but hey, I'll take 9% growth. That's not bad. I mean, at least I didn't lose in terms of, declining. They still saw growth there in that massive market that is China. So yeah, Nike is on an absolute tear. I mean, I want to know what the guidance is. Maybe that is what's pushing it. And quite honestly, I'm pretty surprised this is moving up like this. I wasn't expecting this at all. I mean, they're up 11-12% after hours, guys. That is a massive move for a company the size of Nike, which I'm not sure exactly what the market cap is, but needless to say, it's a big company, right? It's a large cap company. So watch out for this. I wouldn't rush into it by any stretch of the imagination, guys. I would not rush into it here. I would not FOMO into it. I would wait and see if this does end up maybe pulling back a bit, whether it's to 145 to test that old resistance as a new support, whether it's 140. These are levels that we could start pulling back to as the dust settles, which I don't want to say I guarantee because nothing's guaranteed, but I'm very confident that Nike will pull back in the next coming weeks. I could be wrong. Again, nothing's guaranteed, but I'm confident it will pull back. And Amazon did pull back today. It went down 1.5%. We broke out of the 34.30 resistance a couple days ago. We got pretty overextended. The RSI was overbought, no doubt about it. And we got a profit taken day to day. We got a big drop, about $55 per share, down 1.5%. And I believe this dip will ultimately be bought up. We're right around the not the 180 SMA, the 50 SMA here on the 180-day 4-hour chart. And it looks like we're about to test 34.30 to about 34.40 again as support, which was a resistance a couple of weeks ago. So I feel like Amazon could be bought up here in the low 3400s, and it might end up rallying back and breaking above the highs from a couple days ago, 35.20, and ultimately getting up to 35.50, and I believe it will break that ultimately as well, which you guys can see on the yearly chart. Amazon has straight up been consolidating over the past couple of months, ever since last August. So almost a year at this point, we've been consolidating, and we haven't really broken out of the mid 3,000 level. So I feel like that's coming. I feel like it is, especially leading into, the next couple of quarters here. I feel like Amazon sales will continue to outperform, to be very strong, which is why I'm holding on to Amazon. This is not a stock I'm looking to sell by any stretch of the imagination. If anything, if it pulls back, I'm going to be buying more. So Amazon I like. NEO is another one I'm looking at right now, which we are seeing a bit of a bearish divergence on the 4-hour chart here. here. The RSI has been weakening. We've been pushing up, though, in the stock, and we closed under $46 per share. We closed at $45.46 today, to be exact, and that is it's not worrisome per se, but I want to see it break. Let's put it that way. Considering that was a high point from the middle of March, I'd love to see NEO retake this 46 level. So I'm going to put an alert right there, because if we break out of here, guys, let me set this or extend this to the right. If we break 46, I think ultimately we're going to break out of the recent high at about 48 and maybe fill the gap to about $50, $51. That is ultimately where I do see this going. So watch out for that when it comes to NEO. And we also had DRI report, which is Darden Restaurants. And this stock, you might not even know it, but I guarantee you've been to their restaurants. Some of the restaurants include Olive Garden, which I know you guys have been to, at least most of you, or some of you at least. Yard House, which, guys, let me be honest, I've been going to Yard House every single week. I go every Tuesday or Wednesday or whatever. Doesn't really matter what day. I just go for their happy hour. 10 p.m. they have happy hour, half off the amazing food they have, drinks, and so forth. I usually watch the NBA playoff games there. So, yeah, I'm in love with Yard House. Capitol Grill is another one, a fancier restaurant. Longhorn Steakhouse, and they have a bunch of other ones as well. So this company, although you don't know it, a lot of people don't know Darden Restaurants. I guarantee you they know the restaurants that they own, right? And those are a couple of them, the ones that I just listed off. And they just did EPS of $2.03 versus $1.79 estimated, and revenue came in at $2.28 billion versus $2.19 billion estimated. And I believe, and by the way, they beat EPS and revenue, which is great, like I just read off to you guys. And I believe that this is an interesting company to follow, especially as we're reopening. We've been reopening the economy here across the U.S. So I feel like this will show, and it should do well as we continue reopening, and demand for restaurants is through the roof right now, because everyone has been cooped up in their houses for months on end. Although here in New Jersey, guys, I'll be quite honest with you, I've been out and about for almost a year now, but I know in other states, they've been cooped up longer than people in certain other states. It depends where you live. Of course, California, it is way more restricted over there. And even New Jersey, we had a lot of restrictions, but like I said, I feel like I've been out and about for ever since September, and that was close to a year ago. So, yeah, this is going to be one worth watching as more of a recovery play. And we're noticing the downtrending channel is still intact, although we did go up 3.2% today. And I feel like if we break out of this, we're going to see a very similar pattern to what we're seeing with Nike, right? Nike pulling back that chart. That one was downtrending for months, and now we broke out. Very, very heavy breakout there, as we all talked about earlier. So watch out for Darden, for it to see a potential move like this with what we're seeing with Nike and BlackBerry. Although I couldn't tell you, the different products they have, and I quite honestly don't care, but they reported EPS of -5 cents, which came in line with the estimates, and revenue for the quarter came out at $174 million versus $171.25 million estimated. So EPS in line, and revenue ended up beating. And I'm not looking to invest in this company. I might trade it, and the only reason why I'm mentioning it today was to see if there would be a pop or a massive drop after earnings, and we're not really getting either of those things. So yeah, this one, very risky, like a lot of the meme stocks are. I wouldn't put any money in this that I'm not willing to lose. And look, you're seeing clear as day a descending triangle here on the 10-day chart. So if we end up failing at $12.50 or even $12 flat, if we dump under that, there could be a big drop here. Be mindful of that. We could be going back to $10, $11, the single digits. I mean, I would not be surprised if that were to happen. So keep that in mind, guys. And overall, I guess that's it. You know, we covered a bunch of stocks here, and I made a video earlier covering 3 other stocks. Go check that out. I'll link it down below if you guys are interested. And if you like this video, hit the like button, subscribe, drop a comment, let me know your thoughts. And if you all want to keep up with my call outs, buys I'm doing in the market, sells, all my trades, really every trade I do, long-term, short-term, whatever, all of that is on Patreon, linked right down below, or you guys can go to stocksurfest.com/Patreon, and I'm also doing a morning update video literally every single day. I haven't missed one in months, guys, and that's for the top tier patrons, so check that out. Again, link down below, and feel free to get your free money from Webull, from M1 Finance, from Coinbase. All of those are linked down below as well. So yeah, that's it. I'll catch you all in that next video. Thanks for tuning in again. As always, keep crushing the markets, guys. Stay safe out there. Peace out.